All right, hi everyone. Right, welcome to the live analysis session brought to you by IC Markets. Right, first of all, had a great weekend. We charging with your family and friends, and we get a brand new trading week underway. Right, before we begin, please take note of the disclaimer. Right, take note that this is marketing communication. It does not contain and should not be construed as containing investment advice or investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading forex and CFDs, as they carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Right, my name is Ketan Rameshchandra, and this webinar series is brought to you in a special partnership between IC Markets and MS Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years 2019, 2020, and 2021. Right, before we dive into the charts and trading view, we're going to take a look at what's lined up on the economic calendar for this week. Right, there's quite a few things going on. We've got two key labor market uh, reports out of the US, as well as a central bank interest rate announcement by the ECB. Right, so besides these three events, there's quite a few other things going on as well. As you can see here, it's a very heavy calendar, ranging from consumer inflation on Monday for the EU area on Monday 10 a.m. GMT time, as well as manufacturing PMI report from the Institute for Supply Management in the US. Tomorrow on Tuesday, we've got retail sales and the policy meeting minutes for the RBA. We also have Governor Kazuo Ueda delivering his opening remarks at the IMF event in Tokyo. Then on Wednesday, we've got GDP data and consumer inflation out of Australia and Switzerland, respectively. And of course, we have the ADP employment report along with the ISM services PMI report. And then on Thursday, the ECB is widely expected to move ahead with another rate cut, reducing its main refinancing rate by 25 basis points. And followed by ECB President Christine Lagarde's press conference. And finally, on Friday, 7th of March, we have the highly anticipated non-farm payrolls, which will be released along with the unemployment rate, and that's at 1:30 p.m. GMT time. So it's a very heavy calendar, which is very likely to inject a lot of volatility for financial markets. Now, taking a slightly closer look at the ADP employment report, and we can see here the ADP report tracks payroll growth for the private sector in the US, and payroll growth has been relatively strong in the second half of 2024, right? Especially with December's and January's reading bouncing, maintaining momentum, as 183,000 workers were added to the payroll to private payrolls in January of 2025, higher than the forecast of 150,000, while at the same time, December's figures were also revised upwards to 176,000. So in short, January's ADP employment report pointed to strong figures. However, we are starting to see job creation slow down in February. You can see now just 144,000 jobs are expected to be added to the US economy, right, to the private sector in the US economy, which is significantly lower than the previous 2 months of job creation, as well as sitting underneath the 12-month average of 149,000. Right, so should we see a much weaker employment figures by the ADP, right, this is likely going to create pretty strong headwinds for the US dollar, right? And this is the first half of the labor market data, right? And then on Friday, the BLS, which is the Bureau of Labor Statistics, will release the non-farm payrolls and the unemployment rate. While the unemployment rate is expected to remain unchanged at 4% in February, we're expecting to see job creation slow down, right? We can see here January itself, we saw the pace of job growth slow quite significantly, with only 143,000 jobs being added to the US economy, significantly lower than the forecast of 170,000, as well as being lower than the 12-month average of 168,000. Right, hi Ajay, hi W, great to see you as well. Thanks for tuning in. Right, so while we saw job figures rebound strongly in November and December, especially with upward revisions for these months, right? We saw a combined upward revision of 100,000 in November and December, signaling strong job gains over this period. However, January saw only 143,000 jobs being added, while February's forecast points to a small uptick. Right, this small uptick of 156,000 still sits underneath the 12-month average, and should we see a combination of weaker employment reports by the ADP and by the BLS, this is very likely going to function as very strong headwinds for the US dollars. We can probably expect the dollar index to drop significantly lower by the end of the week. Should we see these labor reports highlight some softening in the state of labor market strength. Now, sandwiched in between these two labor market reports from the US, the ECB is very likely going to move ahead with another rate cut. This should be its fourth or fifth consecutive rate cut, where they're going to make a 25 basis points reduction, and that would bring the main refinancing rate down to 2.65%. Right, I think there's no surprises there that the ECB will cut rates once again. However, the outlook on future monetary policy action will be key, and ECB President Christine Lagarde will shed more light during a press conference. Right? Should she uh, present as the ECB as being very cautious with regards to any future rate cuts, this could cause price action to reverse quite swiftly. Right now, this could be very well be a case of buy the rumor, sell the news, in the sense where everyone knows the ECB is going to cut rates on Thursday. So as we approach Wednesday, as we head into the middle of the week, as we are on Wednesday and Thursday, perhaps the euro could start to sell off quite aggressively before the interest rate decision is released. But once the statement is dropped and the press conference by President Lagarde commences, we could see a swift reversal in price action as well. So take note, we could see very wild swings for this currency pair, right, for the euro on Thursday, right? Okay, with that, let's move on over to the charts and trading view, and we'll begin today's analysis. And also at the same time, do remember to smash the like button on the YouTube page, as well as dropping a request in the chat box here as well. Right, of course, we'll begin the analysis on the dollar index. Right, work our way through a couple of the major currency pairs. Right, we'll definitely be touching on the euro since we've got a major central bank announcement coming up on Thursday. We'll touch on the commodities as well. Crude oil and gold, and of course we'll be looking at Bitcoin. Actually, let's start with Bitcoin because we've seen very strong price action over the weekend, right? US President Donald Trump has announced had signed off on an executive order on Sunday, 2nd of March, for to move ahead with the creation of a crypto strategic reserve, where the US government will be looking to buy Bitcoin along with Ethereum, Ripple, Solana, and Cardano as well. And all these coins have received a huge boost, especially with Bitcoin rallying over 20% since its lows of last Friday. Right? If you look from last Friday's lows to Sunday's highs, we've seen Bitcoin rally more than 21%. And this is a huge move in just a matter of a couple of days. However, this is still falls short of how much Bitcoin has pulled back, or it's actually been in a bear market. If you look at it since mid-January, right after hitting intraday all-time high of $109,547, pretty much, right on 20th of Jan. This coin has been falling down sharply, entering a bear market where it has fallen almost 29%. But since last Friday, of course, it has reversed sharply, bouncing over 20%, but it looks to have stalled at around $95,000. So you can see here very clearly running to a little bit of resistance, right? See, running into a little bit of resistance here. There's actually a nice pullback resistance at $94,689, where Bitcoin looks to have reversed off today, right? This is a pullback resistance that's also accompanied by a Fibonacci retracement, right? We ran a retracement from this swing high, the intraday all-time high on 20th of Jan, going down to the swing low here on the 28th of February. We can see that the 58% retracement aligns pretty close to the pivot, which is a pullback resistance, which is where Bitcoin looks to have stalled yesterday, Sunday, 2nd of March, and the downward momentum has continued today. However, it is testing. What I see now is a strong overlap support, right? You can see this level here. Let's zoom in a little bit. You see this overlap level at 91,870 is a pretty strong overlap, and it looks to be stabilizing at this level for now. Now, should this level give way, right? If this level gives way, I think very likely we're going to see Bitcoin drop lower, right? Despite seeing the nice rally overnight, this level at 91,870, this overlap support highlighted by the green dotted line is going to be key. And if we do see this level give way, then we're quite likely to see Bitcoin slide lower. And where it could eventually end up is at this swing low support that has taken place last Friday. That's around 83,600. And it's also accompanied by Fibonacci retracement at 50%. Right? You can see the wick here. The Friday's wick dropping as low as 78,000. And when we zoom out, we can see that, oh, okay, hang on, this should actually begin from here. Let me see, right? Let's start again. Running a Fibonacci retracement from this uptrend from 5th of August to the intraday all-time high on the 20th of Jan. Let's look at all the fibs. And we can see, all right, we can still use 50%, although there's quite a huge zone here. 50% is quite a huge zone. Nevertheless, let's just highlight this as such, right? So we can see here, Bitcoin as sharply as has reversed overnight, it looks to be pulling back quite strongly. And at the same time, I'd also like to bring your attention to this significant descending trend line. It's a very significant descending trend line that has been in place for Bitcoin since the 31st of January. You can see several times where Bitcoin has risen into this descending trend line and failed and reversed to drop lower. Right, so this time as well, after surging as much as 20% on Sunday, it looks to have stalled at a pullback resistance identified by the pivot, which is accompanied by Fibonacci retracement at 50%. And at the same time, we continue to see Bitcoin trading underneath this descending trend line. However, there's a strong overlap support at 91,860 or 870. If this level can hold, right, then we could, if this level holds and we see a bullish reversal take place, especially if Bitcoin can clear this descending trend line, then that would definitely attract a lot of buyers back into the market, and we could see Bitcoin climb higher, right? It could definitely accelerate the rise in Bitcoin. However, this overlap support is going to be key, right? If it fails and does not support price, we are likely to see Bitcoin slide all the way down back towards 83,600 once again. This is a swing low support that was formed at the end of February, and it's accompanied by 50% Fibonacci retracement as well. It's a pretty big support zone, right, ranging from 80,000 to about 84,000. Right, so take note, the overlap support at 91,870 is going to be really important over the next few hours, right, maybe over the next 6 to 12 hours. And if this level does manage to hold, then we've got a good chance that price could stabilize and make an attempt to break above the descending trend line. But on the, conversely, right, if this level gives way, there's definitely going to be further downside action for Bitcoin, right, and where it could then stabilize could be around the first support, which is at 84,000 years. Significant swing low taken place at the end of last week, which is also accompanied by 50% Fibonacci retracement at around the 80,000 mark. Right, so these are the key levels here for Bitcoin, right? Despite the strong rally overnight, Bitcoin looks to have stalled at around $95,000, but 92,000 is going to be key, right? $92,000 is going to be a key level here, or 91,869 to be specific. It's going to be a key level, and if this level does hold, let's look at it on a 1 hour time frame. Right, it seems to be consolidating around this level for now. Right, it seems to be consolidating around 91,870. This is going to be pretty important, and at the same time, we can also identify another descending trend line on the 1 hour time frame. So if we do see Bitcoin break higher, right, through this descending trend line, and if it can reclaim the pivot once more, then we've got a good chance that perhaps the bulls are back, and we can expect Bitcoin to break above this overarching descending trend line that's been identified on the daily time frame. Right, so take note, we are at a pretty critical juncture for Bitcoin, right? Especially when you look at it on a 1 hour time frame. Price looks to be consolidating around a key overlap support, which is at 91,870. And if we can clear this descending trend line on a 1 hour time frame and reclaim the pivot, right, then that means we probably have a good chance that the bulls are back in control, and we could see Bitcoin smash through this daily descending trend line, triggering further bullish momentum. Right, so these are the key levels for Bitcoin on a daily time frame here, with the first and support resistances being identified, as well as the pivot, which is now an overlap resistance. Right, the pivot was previously identified as a pullback resistance, which is now going to be identified as an overlap resistance here. All right, let's now come back to the dollar index. Right, we've also seen the dollar index stall at its own pivot. Right, the pivot was previously identified. The pivot at 107.62 was previously identified as a pullback resistance that's accompanied by Fibonacci retracement at 38.2%. This retracement was found starting from this swing high on 3rd of February, going down to the swing low on the 24th. Right, you can see the 38.2% retracement aligning very well with the uh, pullback resistance, which is now formed into an overlap resistance. Now, should dollar index is also testing what I see pullback support level, right? It's a pretty decent pullback support level at 107.12, right? If this level gives way, right, then we can expect dollar index to slide close to the first support, slide all the way down close to the first support. So this pullback support at 107.12 is going to be labeled as a downside confirmation level, which means that if price breaks underneath this level, we could very well see further downside acceleration, with dollar index dropping towards the first support. So if anyone's been short on dollar index since today's open, right, take note, the downside confirmation level at 107.12 is going to be critical, and should we see it break through the 107 level, we are likely to see Bitcoin, we're likely to see the dollar index slide lower towards the first support, which is at around 106.10. This is where you can identify your take profit target, and I would also identify another take profit target as well. There's another nice overlap, intermediate overlap support at 106.75, right? So if dollar index breaks through the downside confirmation level, I would identify the first take profit target for any short trades at 106.75. And of course, if this index continues to slide even lower, I would be identifying the second take profit target at around 106.10, which is close to the first support. Right, so take note, dollar index is sliding lower, right? We can see since making this high in mid-Jan, it has made a series of lower highs and lower lows, and in fact is actually trading within a pretty significant downward channel, right? We can see several touches to the upper trend line of the downward channel and a few touches to the lower trend line of the downward channel. Of course, we see this wick on Monday, 3rd of February, spiking higher, but nevertheless, you can see this downward channel continues to remain respected, especially the intersection of the pivot, the 38.2% Fibonacci retracement, and the upper trend line of the downward channel here, highlighting a very strong resistance barrier. Right, so this is where dollar index has made a nice bearish reversal today, and this downside could gain further traction, especially if we can break below the downside confirmation level. Downside confirmation level at 107.12 is a pullback support, and if this level gives way, we can target another overlap at 106.75 as the first potential take profit target for any short trades on the dollar index. And of course, if it continues to slide even lower, we're going to be targeting another overlap support at 106.05 as the next potential take profit target. All right, take note of the key resistances for the key support levels for the dollar index. And as it continues to respect the downward channel, the bias for the dollar index is to the downside. And especially if the downside confirmation level gives way, we could see dollar index really drop all the way down. And remember, if we see weaker than expected employment reports on Wednesday and Friday, that's very likely going to cause dollar index to drop even further. Right, so these are the key levels here for dollar index on the daily time frame. Let's move on over to the euro. Right, so we can see the euro looks to have stabilized last Friday at around 1.0370. It gapped higher. Take note, the euro has actually gapped higher. Today it closed at 103.73 on Friday, and it has gapped higher to open at 103.95, right, about a 20 pip gap. As you can see here, the euro has gapped open higher. It has yet to fill the gap, but looks to be retracing higher. However, right, I see a strong resistance. I see a strong multi-swing high resistance at 1.0524, which has been in place since mid-December. Right. Remember, with the ECB taking center stage on Thursday, right, we could see the euro come under pressure, right? Maybe on Wednesday or Thursday, we could see the euro start to sell off quite aggressively, and that could mean it could slide down towards the pivot level here. The pivot level is a swing low support that had taken place on Monday, 10th of February. This level sits at 1.0293. Right, and beyond the pivot, which is a swing low support, there's another multi-swing low support that has been in place since 2nd of January, and that level sits at 1.0224. So take note, the euro has gapped higher today, right? It has yet to fill the gap. However, should we see strong selling pick up on Wednesday or Thursday ahead of the ECB interest rate decision, we are likely to see this gap being filled, and we could even see the euro fall all the way down towards the pivot, which is a swing low support at 1.0993. And take note, we could see price action reverse quite swiftly, right? Because everyone's expecting the euro to or the ECB to make this reduction, so we could have a case of buy the rumor, sell the news. So which would essentially mean that we could see the euro being sold off aggressively before the interest rate decision, and then once the statement is dropped and ECB President Christine Lagarde commences her press conference, we could see price action reverse swiftly. So regardless, it's going to be a very volatile second half of the week for the euro. All right, the multi-swing high resistance at 1.0523 is also accompanied by not one but two Fibonacci retracements. The first retracement was found by starting from this swing high on 6th of November, ending with a swing low on 13th of Jan. We can see that 50% retracement sits slightly above the multi-swing high resistance at 1.0524, and we also see another Fibonacci retracement at 38.2%. This retracement was found starting from this swing high on 25th of September, and of course ending with the swing low on the 13th of Jan. And the pivot, which is a swing low support, is also accompanied by a Fibonacci retracement at 78.6%. This retracement was found starting from this swing low here on 3rd of February and ending with the swing high. Let's see where's the highest point on 26. And you can see here, this swing low support is also accompanied by a Fibonacci retracement at 78.6%. Alright, so these are the key levels here for the euro. Alright, Jamilu, you've got requests for the dollar franc and dollar yen as well. Alright, great. Great to see the requests coming in. So let's take a look at that. Let's start with dollar yen and then we'll come to dollar franc. Right, looking at dollar yen, we can see that this currency pair has been in a strong downtrend. Since 10th of January, we can clearly see a series of lower highs, lower lows. So in fact, we are also able to identify a very significant bearish channel as well. Right, we can see several touches to the upper trend line of the downward channel and a few touches to the lower trend line of the downward channel. So the dollar yen continues to respect this downward channel at the intersection and the upper trend line of the downward channel is also going to serve as an important resistance barrier. However, we've seen the dollar yen actually stall at a very significant overlap resistance. This level at 151.18 has been identified as a pivot. It's actually a very significant overlap resistance. If I stretch it all the way here, right, you can see how this is a very clearly a very significant overlap, right, where price has reacted off several times, and we can see very clearly last Friday dollar yen running to resistance here at around 150.90, and today the bearish reversal has taken place, and we can probably expect dollar yen to slide lower. Now, if anyone has shorted the dollar yen, right, as it continues to remain in this downward channel, right, I can identify several take profit targets, right. I see the first take profit target identified at 148.64. This is a multi-swing low support, right, with the first taking place at the beginning of December and the second swing low being formed at the end of February, right? So very clearly a very strong multi-swing low support at 148.64, which can be used in the identification of a potential take profit target for any short trades on dollar yen, right? As we've seen it make a bearish reversal today, as markets reopen today has made a bearish reversal of the pivot, a very strong overlap resistance that's accompanied by a Fibonacci retracement at 23.6%. And we found this retracement starting from this swing high on 10th of January, ending with a swing low on the 25th of February. We can see the 23.6% retracement aligning very well with the pivot here. And we can also see the 61.8% retracement aligning very well with another overlap, and that's at 154.79. There's perhaps one more retracement that we can run starting from this swing high on 12th of February, going down the swing low on the 25th. Let's look at all the fibs. We can see that the 38.2% retracement also aligns very well with the pivot. Right, so we have a Fibonacci confluence. A confluence simply means we have more than one Fibonacci level at a particular price zone. So in this case, the pivot, which is an overlap resistance, is accompanied by not one but two retracements, and those are at 23.6% and 38.2%. Right, so take note, a bearish reversal looks to be in progress, and we can identify the first take profit target at around 148.70. And of course, if this currency pair continues to slide lower, we can target the first support at 146.90, which is a pullback level that's accompanied by a Fibonacci retracement at 61.8%. Starting from here, right, this retracement was found starting from this swing low on 16th of September, going up to the swing high on 10th of Jan. We can see the 61.8% retracement aligned very well with the pullback, and at the same time, we can also see a 100% projection aligned very well with the first support too. Right, this projection level was found starting from 0.1, 10th of January, going down to 0.2, 7th of February, and ending at 0.3, which is the 12th. You can see the pullback support at 146.90 is accompanied by a Fibonacci confluence as well, which compromises of the retracement at 61.8% and the projection at 100%. Alright, so these are the key levels here for the dollar yen, and especially if dollar index continues to slide lower, right, we can also expect dollar yen to continue edging lower as well, right? So remember, it could approach a significant multi-swing low support at 148.64. Right, let's move on over to dollar franc. Right, dollar franc itself has run into resistance last Friday. It actually gapped lower today as well. You can see it actually closed at 90.30 last Friday, and it gapped lower to open at 90.09. Right, so this gap has yet to be filled. Right, this gap has yet to be filled, but I think dollar franc could continue to slide lower as demand for the dollar looks to be weak. Right, as markets reopen today, demand for the US dollar looks to be weak, causing currency pairs like the dollar yen and dollar franc to slide lower. So despite the gap not being filled just yet, or maybe the gap has been filled. Let me take a look. Let's take a closer look. Oh yes, actually, in fact, the gap has been closed. Right, if you look at it here, let's go down to the 4-hour time frame. You can see that this gap clearly has been filled. So that means we are likely to see dollar franc resume the downtrend. Right, noted that gaps like this are likely to be filled, which has already happened, which has already taken place early today. So I think the bias for dollar franc is also to the downside, and I think we can also identify a pretty decent descending trend line as well, right? It's a pretty decent descending trend line, and we can identify as well that the descending trend line intersects with the swing high resistance that was formed on 19th of February, right? This has been identified as the pivot at 1943. This swing high resistance is also accompanied by a Fibonacci retracement, starting from this swing high on 12th of September, ending with a swing low on the 25th, and we can see the 50% retracement aligning pretty well with the pivot, which is identified as a swing high resistance. Right, and higher up, we see a very significant multi-swing high resistance at 91.71. First swing high resistance taking place on 13th of Jan, second on 3rd of February, and the third taking place on the 12th. So very clearly a very strong barrier here. Now, looking slightly below, I see a very strong overlap support at 89.13. You can see the dollar franc has reacted off this level several times, most recently forming a very nice swing low here on the 26th of February, right? It's bounced off this level several times since mid-December. So clearly a very strong overlap level at 89.13, which is also accompanied by Fibonacci retracement at 38.2%. This retracement level was found starting from this swing low on 6th of September, going up to the swing high on the 13th of Jan. And we see the 38.2% retracement sitting pretty close to the overlap at 89.13, which has been identified as the first support. So any short traders for dollar franc, right? Any short traders for dollar franc, I would be targeting close to the first support, maybe at around 89.30, right? At about 89.30 is where I would identify a potential take profit target for dollar franc. But at the same time, should I see dollar franc break through this key descending trend line, this is where I would be monitoring closely as well. I'll probably be identifying my stop loss slightly above the descending trend line, right? If you're short on dollar franc, I would place my stop loss slightly above the descending trend line, trying to trail it down should price continue to slide lower. And of course, I'll be targeting this support zone beginning from 89.40 to about 89.10 as a potential take profit target for dollar franc. All right. Okay, we've covered dollar yen, dollar franc. All right, trading must. Okay, actually we've already covered Bitcoin, but it's all right. I can quickly cover it again. We actually covered Bitcoin at the start. No worries. We can do it again. Basically, we've seen Bitcoin and the wider crypto space rally strongly overnight, right? With President Donald Trump announcing executive order for the creation of a crypto strategic reserve for the US government. So we've seen Bitcoin rally as much as 20% since Friday's lows. However, it's run into resistance at an overlap level at 94,690, which has been identified as the pivot. This overlap resistance is also accompanied by a 50% Fibonacci retracement. Right, it is now testing a very critical overlap support at 91,869 when we look at it on a 1 hour time frame. Price seems to be consolidating around this overlap support, and if Bitcoin can break through this descending trend line on the 1 hour time frame and reclaim the pivot, we've probably got a good chance that this bullish reversal that has taken place over the weekend is likely to gain further traction. But for now, we're at a pretty critical juncture for Bitcoin, because if the overlap at 98,870 doesn't hold, we're likely to see Bitcoin slide lower, potentially all the way down towards the first support, which is a swing low that was formed at the end of February, and that's at around 83,600. Alright, okay, so this was Bitcoin. Let's move on over to the commodities before touching on the indices. Let's start with gold. Right, we can see gold is pulling back towards pullback support at $2,788 per ounce. This is a pullback support level that's accompanied by 50% Fibonacci retracement. Right, we can see gold has lost more than 4% since making its intraday all-time high last Monday. Right, however, prices seem to have stabilized today at around $2,860 per ounce. However, the bias for gold still looks to be to the downside as long as it continues to remain under this descending trend line. And when we look at it on the 4 hour time frame, that's a pretty important descending trend line to take note of. If gold prices continue to remain under this descending trend line, we're likely to see it drift towards the pivot, which is a pullback level at 2,788. However, any break above the descending trend line could see gold prices make a strong run towards the first resistance. First resistance is a swing high resistance close to the intraday all-time high, and that level sits at $2,954 per ounce. Beyond the pivot, which is a pullback support, there's another overlap support at $2,719 per ounce. We can clearly see a very strong overlap, with gold prices reacting up this level several times since 24th of October. And this level is also accompanied by a Fibonacci retracement at 61.8%. Now, these retracements were found starting from this swing low on the 18th of December, going up to the intraday high on the 24th. Alright, so for gold, it has been pulling back quite sharply since last Tuesday, and as long as it continues to remain under this descending trend line, which is much more visible on the 4 hour time frame, right? Much more visible on the 4 hour time frame. It continues to remain restricted under this descending trend line. We can expect gold to drift towards the pivot at $2,788 per ounce. However, on the flip side, if this descending trend line breaks, or if price breaks through the descending trend line, then of course we can expect the bulls to grow stronger, and we can expect this instrument, right, spot gold prices to rise up towards close to the first resistance at 2,954. Now on this downtrend here on the 4-hour time frame, we can also run a Fibonacci retracement starting from this swing high on the 24th, going down to the swing low on the 28th. Looking at all the retracement levels, we can identify several intermediate resistances as well. And I see a pretty decent overlap resistance at 2,882, which is accompanied by Fibonacci retracement at 38.2%. And I also see another overlap resistance at around 2,924, sitting close to the 78.6% retracement. So let's keep 38 and 78.6% retracements. So looking at support goal on the 4-hour time frame, right? We have the intersection of the descending trend line, the overlap resistance at 2,882, and the 38.2% Fibonacci retracement, identifying a strong resistance barrier. And if you can see gold prices smash through this barrier, then very likely we'll see the bulls regain control and drive it up towards the 78.6% Fibonacci retracement, right, which is also another overlap resistance here. So take note, although the bias for gold looks to be to the downside for now, but any clean break through this barrier here is likely to attract more buyers. But for now, it looks to be sliding lower. Right, so this is gold on the daily time frame. Right, then let's move on over to WTI oil. Right, XTI USD is the instrument that tracks WTI crude oil futures, and we can see that this instrument has been in a strong downtrend since 16th of January. Right, actually, it's probably even we can probably even identify a bearish channel. Right, there we go. We can identify a very nice downward channel. Right, and this is where pretty much WTI oil failed today. Right, it hit the upper trend line of the bearish channel and reversed swiftly to drop lower. It's falling towards the pivot. Right, looking the pivot here at $68.80. It's a swing low support that was formed last week, and this is where price could stabilize. Right, price could probably stabilize here to make a minor rebound. However, beyond this swing low support at $68.80 per barrel, there is a very significant multi-swing low support at $66.66 that has been in place since 10th of September. This is a very critical, this is a very significant support zone for crude oil. And of course, in terms of resistance, there's a very significant overlap resistance at $73. Right, you can see this overlap resistance has been in place. This overlap resistance has been in place since 24th of September. Right, and it's also accompanied by Fibonacci retracement at 38.2%. We've started this retracement from this swing high on 15th of Jan, going down to the swing low on the 26th. Alright, so these are the key levels here for XTI USD. This is the instrument that tracks WTI crude oil futures. And also, I think not only has it run into resistance at the upper trend line, I believe there was a Fibonacci retracement as well. Right, if you were to run a retracement from this swing high on the 20th of September, going down to the swing low here on the 26th, we can see that the 38.2% retracement actually aligns very well with this level here. Right, actually, you can see a nice overlap resistance at $70.40 as well, pretty much where crude oil or XTI USD has failed today as markets reopen. Right, we could see WTI oil stabilize at around the pivot here at $68.80, and this is where it found support previously last week. So this could be an area where it could stabilize once again to stage maybe a minor rebound. Right, not expecting a strong bounce, but perhaps some consolidation and maybe a small retracement to the upside before resuming the longer term downtrend. All right, now let's move on over to the indices. starting with US 100 and US 30. Alright, but before I do that, I'm just going to quickly launch a poll as well. Truly appreciate it if you guys can give your feedback with regard to today's webinar, and then we'll continue the session uh, with the indices, and of course any other requests that you may have. Alright, so moving over to US 30. Right, oh no, sorry, yes, US 30 and US 100. Right, so US 30 is the instrument that tracks the Dow Jones Industrial Futures, and we can see that it has actually reacted off an overlap support, which is the pivot last Friday. Right, last Friday we saw Dow Jones stabilize around this level here and stage a very strong rebound. This is a very key overlap, and we can see that has been in place since 19th of November, right? And on 19th of November, an overlap is formed, and we can see price has reacted off this level several times since then. Right, and the most recent one is a very significant swing low that was formed towards the end of last week. Right. This overlap support is also accompanied by Fibonacci retracement at 50%, starting from this swing low on 13th of Jan, going up to this, which is the swing high, here on the 31st of January, right? You see 50% retracement accompanying the pivot very well. Beyond that, there's another multi-swing low support, the first taking place here on 4th of November, and the second taking place here on 10th of January, which is at 41,777. This is where the first support sits. And of course, higher up, the first resistance at 45,042 is a multi-swing high resistance that has been in place since 3rd of December, right? You can see Dow Jones or US 30 failing at this level several times, and this is clearly where the first major resistance sits. Now, what's also important is this descending trend line, right? There's a pretty good descending trend line that we can identify here, right? This descending trend line has been in place since 6th of February, and if we do see US 30 reclaim this descending trend line or smash through the descending trend line, we are likely to see we are then very likely to see US 30 at least try and make a good run towards 45,100. But for now, right, it looks to be edging higher, closer. But I think this breakout here is likely going to, or this descending trend, a break through the descending trend line is likely to see further upside momentum for US 30. And let me see. Okay, maybe I would like to draw Fibonacci retracement as well from this swing high on the 6th of February going down to the swing low of last Friday. Just want to keep an eye on maybe the 50 and 61% retracement levels here, right? This is also a zone that sits pretty close to the descending trend line, so we have identified a pretty strong resistance barrier between the descending trend line and the 50 and 61.8% Fibonacci retracements, right? Should this level fail to hold US 30, then definitely I think the bulls are back in control, and we could see further bullish momentum towards the first resistance. All right, now let's move on over to US 100. Oh, this is probably for IC market. This is probably US Tech. Let me see if I remember correctly. What is this called? Oh yeah, it is called US Tech. All right, okay, there we go. Right, so US Tech, of course, is the instrument that tracks the Nasdaq 100 futures. And similarly to the Dow Jones, right, we can see it stabilizing at around 20,600 last Friday, and we can see it make a very nice swing low here, very similar to the swing low that was formed here in mid-Jan, right? So it has bounced off a pretty critical swing low support, a multi-swing low support, in fact, with the first swing low taking place in mid-November, second swing low in mid-Jan, and the third one at the end of last week. Right, so very clearly, price has reacted off the pivot here. Price has reacted off the pivot here at 20,418, which is a multi-swing low support. Right, beyond this multi-swing low support, I see another support as well. Pretty decent swing low at around 19,750, right? 19,760. And we see a nice swing low being formed here in the beginning of October, and we can even argue that it found support once more at the beginning of November. Now, on this uptrend, we can probably run a Fibonacci retracement from this swing low on the 5th of August, going up to the intraday all-time high that was formed on 18th of February. We can see that 50% retracement aligns very well with the first support. Let's take a look at all the fibs, and we also see that 38.2% retracement aligned just underneath the multi-swing low, which is the pivot. So let's keep 38 and 50 in the analysis here. Alright, in terms of resistance, right, probably I see a pullback level here. That's a pretty decent pullback, almost like an overlap at 21,344, right? You can see support being formed here on 10th of February and then running into resistance on the 26th and 27th. This is where I would like to identify the first resistance, right? So if anyone has gone long on US tech since last Friday or perhaps from today's open, right, I would identify my first take profit target at around the first resistance at 21,344. This is an overlap level. And I would also like to highlight that after closing at 20,854 last Friday, US 100 or US tech, sorry, opened higher, it gapped higher at 20,933, but it has since filled that gap and reversed very strongly. Now that the gap has been filled, I think we should see further upward momentum, and we could see US tech drift higher as well. So should it continue to rise higher, identifying your first take profit target at this overlap at 21,344 would be a suitable area to do so. On this nice downtrend, we can also run a Fibonacci retracement from the intraday all-time high on the 18th of February going down to the swing low of last Friday. We can see the 50% retracement sitting very well with the overlap at 21,354. Let's take a look at all the fibs, right? And I can also see another pullback resistance level at around the 78.6% retracement. And of course, the ultimate swing high here at 22,200. So let's keep 50 and 78.6% retracement in the analysis here. Right, and you can see 50% retracement aligning very well with the overlap at 21,344. This is where I will identify the first take profit target for anyone who's long on US tech. And should we see further bullish momentum, I would then target the pullback resistance at 31,842, which is accompanied by Fibonacci retracement at 78.6% as the second take profit target. And of course, if we do see a strong rebound materialize, then of course we're going to be targeting the intraday all-time high as well, which is at around 22,200. Alright, so these are the key levels for US tech. Okay, we've covered Bitcoin, we've covered the dollar index, a few of the major currency pairs, the commodities, and the indices as well, right? Are there any further requests, right? Since we've got a little bit of time, right, do drop any further requests here. And also for those who have taken part in the polls, really appreciate it as well. And at the same time, of course, do remember to smash the like button. Right, are there any further requests? with regards to today's analysis. Right, okay, if there are no further requests, then let me see if there's something that I could touch on as well, right? Okay, maybe what we can look at, okay, maybe let's look at one of the uh, Asia Pacific currency pairs. Let's take a look at the Aussie. Right, we've seen the Aussie fall sharply, right? It's actually made a very strong bearish reversal last week. This currency pair has fallen more than 2.5% last week, but it looks to have stabilized at around 62 cents as markets reopen today, right? Similarly to other currency pairs, there's a gap here as well that was filled. The Aussie closed at 62.03 last Friday. It gapped higher to open at 62.08, marginally higher, and it has filled that gap very nicely. After filling the gap, it looks to be retracing a little bit higher. Now it could rise up towards this pullback resistance at 63.13, which has been identified as the pivot. It's a pullback resistance, right, which is accompanied by Fibonacci retracement at 61.8%. So this retracement level was found starting from this swing high on the 21st of February going down to the swing low of today. Right, and higher up, of course, the first resistance sits at 64 cents. Strong swing high resistance, which is also accompanied by a Fibonacci retracement at 38%. This retracement level was found starting from this swing high on 30th of September, going down to the swing low on the 3rd of February. You can see the retracement level accompanying the swing high resistance at 64 cents. And of course, first major support sits at 61.44, a multi-swing low support, with the first taking place in mid-January and the second taking place here at the beginning of February. So very clearly, very strong multi-swing low support at 61.44. Alright, so these are the key levels for the Aussie. Let me see if there's anything else. But maybe we'll just do a quick recap. Right. So it's a pretty heavy calendar as well. It's a very heavy calendar. So I would also like to highlight the two key U.S. labor market reports that will drop on Wednesday and Friday, 5th and 7th of March. That's the employment reports by the ADP and BLS. Right, the BLS report will include the non-farm payrolls and the unemployment rate, and sandwiched in between, we also have the interest rate decision by the ECB. Right, they're expected to make a 25 basis point reduction on Thursday, 1:15 p.m. GMT time, followed by President Lagarde's press conference at 1:45 p.m. GMT. And of course, on Friday at 1:30 p.m. GMT, the highly anticipated non-farm payrolls will be released alongside the unemployment rate. Although unemployment rate is expected to remain unchanged at 4%, we're looking at a pretty weak growth for non-farm payrolls, right? We can see January's figures and the forecast for February continues to sit underneath the 12-month average, and after rebounding strongly in November and December, job creation looks to have slowed down in January of this year, and the momentum looks to be fading again. The fading momentum looks to continue in February as well. As a take note, we could see these two reports highlight some softening in the US labor market, which could create a lot of headwinds for the dollar index, and we could see that index slide lower. Right, so you can see here, the dollar index has actually reversed off the pivot. The pivot at 107.62 has now been identified as an overlap resistance. It was previously a pullback resistance, but after making the bearish reversal today, it is now classified as an overlap resistance. That's accompanied by Fibonacci retracement at 38.2%. Right, and it looks to be breaking through the downside confirmation level, right? We had identified a downside confirmation level at 107.12. The dollar index looks to be breaking below this level here, and then I think we're going to see further selling intensify, and we're going to identify several take profit targets along the way. right? If you've been short on the dollar index since markets open today, right, I would identify the first take profit target at 106.75. This is an overlap support, and of course, should this index continue to slide even lower, I'll be targeting 106.5 or 106.10, which is a very significant overlap support that has been in place since 19th of November. And so take note, seeing very strong sell-off for the dollar, causing dollar index to fall, causing euro to climb, right? Causing the euro to climb. The euro has, I would say the euro has sort of broken through like an upside confirmation level as well, right? I would say this would be an upside confirmation level. Similarly to how the dollar index had a downside confirmation level, the euro naturally will also have an upside confirmation level, which looks to be taken out as well, right? So anyone who's long on the euro, right, I would recommend the first take profit target at around the first resistance. That's at 1.0524. It's a multi-swing high resistance that has been in place since mid-December, and slightly above it we can also see there's not one but two Fibonacci retracements highlighting a strong barrier as well, right? So take note, from the breakout level till the first resistance, you have a move as large as the 1%, almost 100 pip gain here to be potentially made. So take note, not bad for pretty, this is a good opportunity to try and capitalize on, especially with the dollar index selling off hard. Demand for the dollar looks to have weakened considerably today, causing dollar index to slide, euro to push higher as well. And of course, dollar yen looks to be making a bearish reversal as well, and dollar franc as well has made a bearish reversal and does look to be sliding lower. All right, so that's all I've got for you guys today. All right, thanks everyone for tuning in to today's session. All right, hi Double, sorry you're a little bit too late. We're just wrapping things up, but I'll just highlight the daily chart here. Right, take note. We've seen Bitcoin reverse off what is now being classified as an overlap resistance, which is the pivot. It's accompanied by Fibonacci retracement at 50%. It is currently testing a very critical overlap at 91,869. And when looking at it on a 1 hour time frame, Bitcoin is consolidating around this overlap support. If we can break through the descending trend line on the 1 hour time frame and reclaim the pivot, it's very likely we could see Bitcoin continue to climb higher. But for now, it is at a very critical juncture. The overlap support at 91,870, and of course this descending trend line. If Bitcoin can break above the 1 hour descending trend line and reclaim the pivot, then I think we've got a good chance that the bulls are back in control, and then I would like to see Bitcoin break through another significant descending trend line on the daily time frame that has been in place since 30th of January, right? All right, I hope that helps. Next time, please tune in a little bit earlier, right? So that you can catch the full analysis without having to rush through it. All right, right. Otherwise, thanks everyone for tuning in. Do look out for all upcoming webinars brought to you by IC Markets for the rest of this week. We got a combination of educational topics in English, Thai, and Bahasa for the remainder of the week. Right, do stay tuned, and I look forward to seeing you at the next sessions. All right, thanks everyone. Take care. Have a great trading week, and catch you all in the next session.